Hello, everyone. This is Sebastian McMahon from IA Financial Group. I am on the road again, but I'm still here for the weekly economic review for the week ending October 14, 2022. So let's start with a look at this week's markets at the close on Thursday. So negative week again for bonds. Interest rates are moving higher. We had a positive week for both Canada and the US stock market, very negative in Europe and in emerging markets. Now, most of the positive returns on stocks came on Thursday. We had quite a turnaround, negative reaction, at least at the beginning of the day from the CPI print. More on that in a second. But after that, a strong rally. Why? We don't know. Seems to be short covering if we look at things in our the position that we're in. But we are in a very volatile environment, and I was looking this morning at some studies that were showing that the cross-asset correlation, so the correlation between most of the important assets, are as high now or even higher than they were in early 2020. So everything is moving together, and you can have these herd movements that can cause some chaos in the markets in a single day. So more on that. We'll see if there's a follow through over the coming days or weeks, and we'll keep you posted on how we feel about the evolution of the market. But the trend remains lower from our point of view. Oil lower, Canadian dollar lower, euro up a little bit on the week, and the price of gold down 2% on the week. So inflation, the fight is far from over. Again, I won't spend too much time on that because I feel like I'm repeating myself. But here is the contribution to inflation, so the decomposition of all of the components that explain the year-over-year inflation. This is for the US, of course. We'll have the Canadian figure next week. Conclusions should be similar, but if you look at the components, you see that the lighter shade of blue, which is transportation, meaning gasoline prices, used cars, new cars, this is what is contracting right now. All of the other components, at least most of the other components, are still expanding. So the fight is far from over because it's just one aspect that is normalizing. The rest is still accelerating, and it's not what the Fed wants to see. And if you want to see something that could be good news, is that the main deflationary factor in 2023 could be used car prices. As you see here, this is the index, the Manheim US used vehicle value index. So it's a price index, and you see how there was an historical rise in used car prices over the last few years, and now we seem to be normalizing. So how fast will that go? Is it 2023, 2024 that we'll get back to trend? I have absolutely no idea, but we should see falling prices here. That should help at least with calming inflation down. So the message of the story here is that if you're in the market for a used car, maybe waiting a little bit could be a good decision. Now, maybe looking at the markets. If we look at the profit margins, which is a very important part of investing, because when you buy stocks, you buy shares of companies, and you buy a share of the earnings that this company will be able to deliver to the markets. Now, profit margins now are at the highest since 1950. So they're very, very high. And they've been accelerating during COVID. So businesses became even more profitable. So now we should expect maybe a normalization in profit margins for a few reasons. As you can see, these profit margins tend to be, mean reverting. So just based on that, we should expect that naturally at some point we have some give back. But most importantly, when you look at the macro environment, if we're going into a recession or at least a global economic slowdown, we should see less production from businesses. So they will be selling fewer things, goods and services. And you have labor shortages on the other end. So if you produce less, usually there are some layoffs. But in this environment, if you go to massive layoffs, it's likely you won't be able to hire everyone that you just fired. So businesses are likelier than in the past to keep more staff on their books to make sure that they're ready for the next economic turnaround. And that could lead to some pressure for profit margins over the coming a few years. So if you look under the hood, so normalization of profit margins has already started. I know we like to use our own charts, but here one from JP Morgan that shows that in 2022, growth in EPS, so earning per share, already at 0%. Not because revenue has fallen. The green part shows that revenues are rising, but it's the profit margin that's starting to contract. So we're starting to see that already, less profitability on the books. And when you look at corporate earnings for the coming year in 2023, the chart here on the left, you have all of the quarters of 2023, you see that the earnings per share are being revised lower for every quarter. And on the right, for the whole year, is being revised lower. There is likely some more downside if we go in a scenario of very, very slow growth in 2023. So again, when you look at the stock market, you need to look at the valuation of the stock market, but also the ability of businesses to grow their earnings. And we're in an environment where there could be some strong headwinds for growing the profits of businesses. So this likely means that profitability will, uh, profit margins could contract, EPS growth could slow down. So that means that the stock market could be facing some more headwinds for a little while. So just be warned. What to watch next week? Bank of Canada's Business Outlook Survey. Always an important, an interesting read. We'll look at the CPI inflation in Canada. We should go from 7% to 6.6% in September. We'll be covering all of the details of that for you. Terranet National Bank House Price Index. House prices are contracting. We're reading many things in the news for regional markets where the volume of transactions and prices are contracting. So it should be reflected there. In the US, building permits, housing starts, existing home sales. So more about housing next week. So that wraps it up for the week. ia.ca/economy. You can subscribe to the newsletter if it's not done already. Podcasts, we just recorded a few. We recorded one on the situation in the UK. Should be coming out in the next week or the week after. So stay tuned for that. Economy and Finance 101. There's new material coming by the end of the year, and Twitter and LinkedIn. As always, you can find me there. So thank you. Thanks for following us, and I'll be back again next week.